Ladies and gentlemen, we have entered a trade on the NAS100. I just thought I'd get some proof for you here. You see the nice little arrows at the bottom here. Earlier we had a break-even trade just up here, but now we're going to be taking price to the sell side. Today I implemented my strategy on the NAS100. Now using this strategy, I was able to make 700 spawn doolies, £700. $700, whatever you want to call it, with this trade right here. A little bit of indecision, break even at the top, and then we got back in again to catch it all the way down. And I will go through this trade breakdown as we go through the video. However, I don't normally trade NAS100, but I saw an opportunity today. I was like, you know what, we trade US 30 in the same sort of way, so if I can teach you guys through this and walk you through this, then you can get a better understanding of my strategy, how we keep it simple, and how easy it is to actually catch trades like this to pass your prop firm challenges. So without further ado, let us jump straight into the breakdown and let me show you how you can use this strategy to pass prop firm accounts and to get those payouts you've probably been waiting so long for. You join me as this trade is still basically, well, it's played out, but price is still playing. But in this strategy, we use the 30-minute and the 5-minute. The 5-minute is solely for entry candles, entry signals, and to find stop loss targets to put above structures, above the wicks. That's what we use the 5-minute for. The 30-minute we use simply for finding our zones. And on NAS100, the same as US 30, it's the same strategy. It's very easy to find. So without further ado, let's jump into the 30-minute time frame. So if we jump on the 30-minute here, you can probably already notice two things. We mark out the high and low of yesterday's session. Now we only do this for NAS100 and US 30. We don't do it for gold, we don't do it for silver and any other of the Forex pairs such as GJ, EU. We have different strategies for that, and if we get a breakdown on those pairs, then I'll definitely be going through with it. But as it stands, we caught a trade on the NAS100. We have these two zones here. Now we would only mark out yesterday's highs and lows. Don't go marking out these highs and lows from the past week, from a month ago. You'd only mark out them zones to find take profit targets. Now, where was our take profit target? Just to jump straight into it, it was basically we wanted to be aiming for the bottom of this imbalanced candle. So we have this huge gap here on this candle, and basically I want to target the bottom of it. Now I do have spreads on my prop firm account, so what I did want to do is just move it a little bit upwards, just a bit above this wick here, just in case if we do wick in, I would rather get my TP hit instead of we get a wick in and it hasn't registered it because of spreads, and then price just starts reversing as it seems to be now, to be fair. That's the last thing I wanted. So we targeted the bottom of the imbalances. I will be making a video on this just to clear things up if you don't know what an imbalance is, so don't you worry about that. But for the time being, this is why we targeted this zone. Usually we target the highs and lows of US sessions if we're trading in US session. For London session, you would only be trading the highs and lows of previous US highs, London highs and lows. So for this one, we would normally target Monday's US session low in this instance, but you can use previous US zones. So we're using it now and we see, okay, there's an imbalance here. If we fill this imbalance, price may start to reverse. Judging by the time on the day, I got in this trade about, I want to say about 3 p.m. GMT. So we got in around 3 p.m. I was like, I don't want to aim for the moon because that doesn't make sense. As soon as you start aiming for targets that are way too high, that's when you run into problems, and that's when price reverses on you. You have trades that are up 3%, and then you look back at your phone an hour later and you're negative 2%. So have realistic targets. This for me was realistic, not just because it hit, because of the time in the day and the bottom of Monday's US session. If we did come down this far, it would be one hell of a drop. So therefore it would not be smart to have it all the way down here. Yes, you could still have it down here and let's say move your price to break even or into 1% profit. You could have that option and you could let it run. However, for me personally, from my experience, if you target the bottom of an imbalance, when prices like this and when the imbalance is as big as this, if you target the bottom of it, likely chances price can come into it, and then it likes to start sort of reversing a little bit, trickle back to your break-even stops, to your take profit one stops. So it's always best to maximize the profits, target the bottom of the imbalance, and go from there. But how did we find it? Well, we have these two zones here, like I say, from yesterday, and that's all we use for these two pairs. We mark them out from the top of the body to the top of the wick, and bottom of the body to bottom of the wick. Then what do we wait for? And it's as simple as this, guys. So that's all you would mark out for NAS100 and US30. If you jump to the 5 minute, all you'd wait for is a 5 minute bearish reaction from this zone. So for example, if we get a tap into here, if price opens up inside this zone and we get a tap into here, we're waiting for a 5 minute bullish engulfing candle from this zone to take maybe to the top of the zone. So something a little like this, and then you can imagine a 5 minute engulfing candle in this pattern. Now, if price were to open in the middle of the zone, right here, tap back into the top of the zone and then start pushing down, we would wait for a 5 minute bearish engulfing from the top of the zone, and US30 is the exact same thing. So we'd wait for a tap back in, we'd wait for a 5 minute bearish engulfing, and then take price down all the way to the bottom of the zone. Again, something a little like this is what you'd be looking for. Now, to say, what if it breaks? Well, if it breaks the zone, if you do not get your 5 minute bearish engulfing and it just continues through, you'd simply wait for a retest, 5 minute bullish engulfing to take them price further up. Again, just for a little bit of a picture, just something like this. And then you can probably already guess what we would be looking for is a break below, a tap back in, and then a 5 minute bullish engulfing, bearish engulfing, sorry, to take it to the further downside. Once you're out of the middle of the zone, that's when you can go find targets outside of yesterday's 2 price points. For example, we found the imbalance from Monday that we could target, and that's what you use, and that's how you use it. So if we jump down to the chart, what did we do? So we broke down through the zone, got a tap back in, 5 minute bearish engulfing candle, and then price just continued to fall off. Now, my mistake here, and it was a very, very rookie mistake. We got in here, as you can see, I'll just pull it up on my phone. We got in, I'm not sure how well you can see it there, but we got in on this 5 minute bearish engulfing candle. Now I immediately, price was pushing down, I immediately moved my stop to break even. What the excuse was, I don't know. However, that is what happened, and we immediately got tapped out. So I was like, hang on a minute, what am I doing? We got back in the trade. We had a valid stop loss. Let me just delete this one real quick, which was above the body, above the wick. Unfortunately, not above the zone in this case, because if you were to have it above the zone, the win rate would not make sense. I always have a rule that if we're not making at least 1%, it is not worth getting into the trade. So it's just completely not worth it. If you're anything below 1%, I personally would say don't get in the trade. Wait for tomorrow or go to a different pair and see what you can do from there. That didn't mean to rhyme, but I'm just so full of talent. But anyway, we have our stop loss above the body, above these bodies and above the wick. So it's above a structure point here, which I'm happy with, because let's say price broke above this point. I would say, okay, look, basically the trade is going to be invalidated at this point. It might not be, but for me, the clarity is that if we break this structure point, then we want to start heading back to the upside. So that's for me why I would have this stop here. Take profit, like I say, I went through that at the start of the video, the bottom of the imbalance, but you will see a video soon coming on that. We target the bottom of the imbalance because it's likely, and you can see how price has reacted so far from it, that it just does react. There's a couple of things to be aware of, but at the end of the day, the £745 was made. I'll put a little screenshot up on the screen. Yeah, and that's as simple as it is, guys. I'm not being funny. It's the same for US30, and it obviously is the same for the NAS100. So that is as simple as the strategy has to be. I do go in more detail, in depth, and there will be more videos coming to you guys just so I can provide the information and the proof as well. Just if when I catch more trades, more breakdowns will be coming across on YouTube. But in terms of the breakdown, this was it. Hopefully it made sense to you guys. It was probably a bit, oh well, the strategy seems a bit weird, a bit simple, but that it works. But it works. So give it a try, give it a little back test for yourself, and you'll see the results.